Ladies and gentlemen, welcome to Entrepreneurial Finance, an easy approach to entrepreneurial finance in theory. What is entrepreneurial finance and how is entrepreneurial finance different from corporate finance? Is there a different? Well, let's look at two examples. First of all, look at Daimler. You would like to buy shares. So it's an equity investment, public equity. You buy shares from this company. Actually, you know what Daimler is doing. They build cars. You maybe have seen the models. You can look into broker report. You can look what analysts write there. You can look at other reports and so on. And you're pretty sure what you do. I mean, you can't look into the future. However, there's good projections of the future about this company. So it is, to some extent, it is still a risky investment because it's an equity investment, and you can fail because Daimler fails and then the share price is going down. However, this won't be too significant. On the other hand, the upside won't be too significant too. Maybe the share price doubles, but that's it. Making 100% a year is still really good, but the probability that the share price doubles is not very high. Let's look at another example, Outfittery. Outfittery is a company that is giving tips to get dressed for male people, especially. So I'm going to the website and they tell me what clothing I should buy and they're gonna send that to me. I'm telling them I have gray hair and glasses and I'm very conservative and this is how I like to get dressed, and they give me tips about it. Is it a good idea? I don't know. Is this gonna work? They just started. Well, if you put equity in this company, are you sure you're gonna get something back? Well, it depends. It depends whether you believe the idea is good. It also depends on the question, who's the founder there? Who does Outfittery? Actually, it is people from fashion. I think two ladies and a gentleman. And they started Outfittery. And they might know about fashion, they might be deeply in this industry. However, do they know about how to build a business? Maybe not. This is what you look closely into, and then you might decide on an investment, but this investment, honestly, is not even risky. This is uncertain. This investment could be great because all the people are going to Outfittery and they're gonna have 450 million users by the time and are going to be sold for $19 billion to Facebook again. Might happen, not very sure. Might also totally fail. So would you take your 10,000 euros you have into Outfittery or Daimler? Well, actually, that's what entrepreneurship and entrepreneurial finance is about. Entrepreneurial finance is about those companies where it's very uncertain what happens in the future, and actually depending on the people sitting there, whether they can make it a success or not. And this is a very easy approach also to entrepreneurial finance. This is why entrepreneurial finance is a little different compared to corporate finance. We still have a two-sided interaction. We have someone who sells the shares, we have someone who buys the shares. That's the same thing with Daimler and with Outfittery. But we actually, when we invest into Daimler, we don't care about the management board. Maybe we look at the management board and it's a driver for success. But their interest, is this really important? Well, actually, it's important if you look at Outfittery. Do they want to do their company forever, or do they want to sell it after 2 years? If they want to do that forever, do you want to invest in a privately held company? Actually, if you do that, you never get your money back. So it depends on what the people want to do. And having said that, it also depends on if they are able to build a business. Because that's what we said, people from fashion, have they some skills to build a business? Maybe you as an investor can help them to build a business, but it depends. It depends on the person, on the people there. It depends on what the people want. It depends on their interests. And this is totally different to corporate finance. The time dimension, that's basically the same. You invest over time, so you buy shares, you want to sell shares, otherwise you can't make capital gains. So that's the same with Daimler, that's the same with outfittery. However, do you have full information on outfittery? You have lots of information on Daimler. Probably there's not a big information asymmetry. But outfittery, do we really know that company? Even if you look deeply into that company, do you know what's going to happen? Do you know whether it's going to work? It's full of uncertainty, and actually the founders probably have a lot more information on this company than you have. So it's still questionable. There you can see that the uncertainty, which is a part of entrepreneurship, and the owner-manager dominance, they come into play in entrepreneurial finance too. And owner-manager dominance, uncertainty lead to the fact that there is a very special segment in the capital market, early stage financing. And this early stage financing is being built on these two elements, uncertainty and owner-manager dominance. First of all, how do you cope with uncertainty? Actually, you can only do equity investment, because only equity investment give you the chance to make these returns that can pay for other equity investment that fail. If you invest in 10 companies and 5 companies might fail, the other 5 have to make the return for the 5 companies that failed. So the other 5 companies have to make at least 100%. This is only possible in equity investment. 100% interest rate, you won't see that out there. That's the one point. The other point is early stage financing, especially business angel, family and friends and so on, is not only financing. It is helping the people to build their business. This is especially what business angels do. They give money, they give support. And this is what entrepreneurial finance is about. If you go later, if you do an IPO, if you're on the stock market like Daimler, then you can't give support. Nobody cares about you. If you call Mr. Zetscher and tell him what to do, you probably won't get to his phone. And this is what's not happening. And you have lots of information, so it's a safer bet. You probably won't lose your money. So if you invest in 10 companies on a stock exchange, maybe one company might fail. But the probability that they are all alive after a couple of years is very, very high. So this is a totally different capital market. And the early stage capital market, which we will cover in entrepreneurial finance, is the one that has to have equity financing plus has to have an element of support. And this is why there is entrepreneurial finance.